BlackRock announcing fourth quarter results this morning. It beat analyst estimates on the top and bottom lines decisively. In an exclusive interview, I asked CEO Larry Fink about where he thinks we are in the markets right now.
I think I said last quarter that I could see a scenario where the 10-year is going to be at 5%. And so it's getting close to there, close to 480. I could actually see a scenario where the 10-year is at 5.5%. I could also see a scenario where it's going back down to, back down to 4%. And so we have an incoming president who's making some broad changes to the economy, broad decisions, and we'll see how this all plays out. And it all comes down to inflation. And there are some economists who are calling for the Fed continuing to ease 3 more times, and there's some people who are saying they're going to stop, and I even heard from 1 or 2 economists they're going to have to start raising again. And so I don't know truly where we are, but I could say the range of outcomes is broader than the range of options that we just thought of 4 months ago. And I think that's what's going on in the marketplace.
Is that similar for the equities markets in terms of that range?
Well, a 5.5% 10-year would be harmful for growth equity.
Right.
And that's what you're starting to see. That being said, we're going to see a lot of reports this morning related to earnings. So we're going to have earnings for the next few weeks. My bet earnings are going to be stronger overall. Right. That being said, we cannot discount, and this is something that people are not focusing on, the strength of the U.S. dollar. So let's dissect in my earnings announcement. So I'll talk about BlackRock. We had $281 billion of the net inflows. But also, because of the dollar appreciation, we had a $200 billion revaluation of because of the dollar appreciation. That's going to play a big role in earnings in the fourth quarter. And we'll see how all these multinational companies are going to be playing it. But beyond the revaluation of the dollar that you can't control, I do believe earnings are going to be stronger than people think because I believe the resiliency of the U.S. economy. And I think the economy is in very good shape. That being said, is it in too good a shape? Are we going to start seeing elevated inflationary pressures? We'll see that. We'll know that probably by March. But the range is broader.
Also spoke with Larry Fink about wokeism and the politics of the moment, especially as they relate to investing. It was reported last week that BlackRock left a climate-focused group called the Net Zero Asset Managers Initiative, and BlackRock has been something of a symbol for ESG principles and a target for those that see those initiatives as having gone too far. But I told Fink it didn't seem like investors were punishing the company for any of those negative perceptions that may be out there, given the amount of inflows that are coming specifically in the United States, frankly, from red states to BlackRock.
No, actually, we're getting more checks. There's no question we're a topic of debate from the far left and the far right. I think what's resonating, our job is to be a fiduciary for every one client. If a client has awarded us $1,000, our client awarded us $10 billion. Our job is to be doing what's right for them. And so there are a lot of members of the far left and a lot of members of the far right would like to tell me how to manage their money. And what we're telling everybody is our job is to manage your money your way. It's not our money. So all $11.6 trillion that we are responsible for, not a penny of it is our money. And what it just shows, we're doing a very good job of helping each and every one of our clients to do asset management the way they want us to do it. And yes, could we have won more business even if we were not part of a topical debate? Yes, we probably would have even won more. That being said, we never had a year like last year in the United States.
Do you think that this ends that debate?
No, by no means. I mean, look at we are responsible for a lot of people's money. We are a large shareholder listed on behalf of a lot of companies. And so, no, scale and size in every industry, you become a target. And that's just a part of life in a world that is heavily oriented towards populism. But our job is to be persistent in working with each and every client. Our job is not to be working for that left-wing organization or that right-wing organization or that spokesperson from the far right and left. Our job is to be working for each and every client. And that's resonating with our clients.
Real quick, just on that issue.
Yeah.
Will you speak to the idea of taking yourself out of the net zero consortium?
Was I part of the conversation internally or what?
No,
So many things have become politicized. We are responsible now in decarbonization and the whole investing in new technologies for energy. We're the largest manager in the world in that. We're winning more business than ever before in terms of decarbonization technology. We have over $1 trillion that we're responsible that are moving this. So those clients who were interested in the new technologies or new things, they're coming to us.
Right.
At the same time, we're the largest hydrocarbon investor in the world. We always were. And it has been contorted by many people. Today, I think it's $181 billion we manage in hydrocarbon companies. And a little secret, even with all this debate, in the last few years, we won almost every major energy company in the United States their pension fund.